In this video, we will explain startup costs, operating costs, and sales projections. We will talk about why they are important parts of the financials of a business plan. Let's discuss startup costs first. The startup costs part of the financials shows the amount of money needed to start an organization or a business. Even when a business has a very simple design, there are some costs to getting started. For example, a startup taxi service would need at least one car, gasoline or petrol, and a driver. The car, the gasoline, and the driver's time while the business is looking for customers are all startup costs. Let's look at possible startup costs to consider for goods, such as a paperclip. 1. Materials or supplies. This could be recycled metal for a paperclip. 2. Manufacturing or production. A factory to make the paperclips. 3. Employees. How many are needed to make the paperclips? 4. Office rent and office supplies. Computer, printer, paper. Let's look at possible startup costs to consider for services, such as a taxi service. 1. Supplies, gasoline. 2. Technology, machinery, vehicles. A car for the taxi service. 3. Employees, maybe the same number as the cars. 4. Office rent and office supplies, computer, printer, paper. Now let's look at operating costs. These are sometimes called operating expenses. These are the costs to produce a company's goods and services. This means the costs needed to run the day-to-day operations of a business once it has started. Cash is important to a business because it's used to pay for operating expenses. For example, what you pay your employees and suppliers. Without cash, a business cannot operate. Normally, a business plan would include a cash flow forecast in this section to show that there will be enough cash to pay for day-to-day operations. A cash flow forecast is a plan of how much money a business expects to spend and receive during a specific period. We do not have time to review how to create a cash flow forecast in this course. However, because cash is so important, an entrepreneur needs to consider this an important part of a business plan. Now let's look at sales projections. Sales projections show how many products the business expects to sell this year and 2 to 4 years in the future. Sales projections are an important part of a business plan because they show how quickly the business is expected to grow. If sales grow, then the business operation will need to grow too. For example, if a taxi service becomes more popular, the business will need to buy more cars and gasoline and hire more drivers. These projections, therefore, are also used in financial calculations to help forecast or predict how costs will change in the future. Startup costs, operating costs, and sales projections help the entrepreneur show the expected current and future financial situation of a new business.